was saying, watching this fair value gap, and if I'm bullish, what I like to see is a PV array that fails and it becomes an inversion level. And what do I mean by that? I'll explain in a moment. We have this up close candle, the last up close candle, and this swing high before taking out this low here. So that green candle, that's what I'm highlighting, that yellow rectangle one. That's a bullish breaker. It trades above it, takes out liquidity, and then trades down below that low, takes out liquidity. That is a highly manipulated market environment. This is what I meant by saying it's sloppy. This could have very easily went into seek and destroy for the rest of the afternoon and never have gone above this high or below this low. It just could have went back and forth chopping and taking out every little short-term high and low. The fact that we dropped down into this fair value gap, again, took out sell side, rallied up. At this moment here, I said it has the framework for the shift in market structure here with the fair value gap. If it's going to hold, it could have wilted and took out the 39.84 and 39.82 sell side. So I was commenting on that because that was what I was having in my mind as a potential scenario that I would prefer to see. I wanted to see that. And it was not willing to go lower. And then finally went right back up into the breaker. Now you're probably thinking, well, why isn't this a breaker? This low to this high and that low. It is. But I cut through candles. So I'm going back to the original breaker here. This was a stop hunt on top of the breaker that originally was formed here. I'm going to go back to the original breaker when it happens. There's logic right there. I'm sorry, but you folks that are trying to teach my concepts, you don't know what you're doing. So please stop. You don't know what you're doing, and you're spreading misinformation, and it's unfortunate because it isn't going to work the way you're doing it. Okay, so it is what it is. Breaker. So we were back inside that range. I don't need it to go above and come back down. I can accumulate inside that breaker, especially if you look real close, there's a small little fair value gap right in here. So we went down, and I mentioned this looks like it's a raid on stops. And the only thing I see now is a bullish breaker and a run to 40.12 when it was forming right in here. Right there, as it was dropping down into that, I was telling you in Twitter that 40.12 is the only thing I can see now. And that was a stop hunt on sell side there. So back and forth in here, we were collectively watching together and looking for a scenario. And I was leading your attention to if we could run out 39.84, 39.82, because that would do what? Take us back down into 39.82 and a half, which is the consequent encroachment midpoint of that gap on the daily chart. Remember how I first started this presentation? I took your attention to the daily chart and a big long wick below the daily candle. And I split it in half and projected it forward. And I was watching that level. Well, it had already went down to 39.82 and a half. It had done that. But I want to see it do it one more time and take out liquidity a little bit more pronounced after the opening at 9:30. But the market just simply was not willing to present that. And it was unwilling to go lower, completely repriced all the way up to the top of the breaker. Perfect delivery. Perfect delivery. Then we went down into what? Boom. There's that gap, that red fair value gap. If you look at my Twitter, I'm cutting through candles, folks. Okay, I'm not supply and demand. Okay, there's nothing like what I'm teaching you. I do not ignore or forget about an imbalance once it's traded to and rebalanced. That's logic. That's narrative. Okay, this point right here was before the 9:30 opening. It was part of the narrative I was looking for. I wanted to see this be reused in the future because the algorithm's going to remember this imbalance. It's not going to look at this high and this low and say, oh, well, this no longer matters, like anybody else that would be familiar with inefficiencies. So the algorithm is going right back into this. The market drops down into that fair value gap. That candle's high. That right there is what I was referring to. Watch and see if it offers what? Support. Go back and look at the tweets, folks. That was not a miscue. It was straight up, right out of the logic I teach my students. I'm taking your attention to this fair value gap, and if it goes above it, it comes back down and acts as support. Then we have a narrative that we can trust going forward. So now we are now bullish, looking for what? The 4,012 level. Then we have to have an entry pattern, right? Well, we're inside of the breaker. And then we have a fair value gap right down there. Look at the bodies of the candle right there. Closing price nails the high. That's perfect. It overshoots it a little bit. That's fine because that's an order block. Down close candle. Perfect delivery. But that body's stopping dead in its tracks inside that fair value gap right there. And then off to the races we go to 4,012.